S&P 500, today's date, naturally so, 3:12 p.m. Pacific Standard Time, 5/3/2011. And what do we have here? We have the S&P 500 monthly chart. And what is disturbing for it for the bull, in my view, is we're going to hit the extreme overbought level, 94.56. Earnings season is winding down. The good news that has happened in individual names in the S&P that have already reported with a scorecard of 70% or better on good earnings. No one's saying that the earnings are bad, but we are saying that the individual equities and the indexes are getting to an extreme overbought level where corrections must occur. Back in February 16th, 17th, 18th in there, we told you there was a correction coming then. That's the truth. It's on the homepage. Go find the truth. Is there anything wrong with dealing with that? Well, you better start dealing with this one here now. So the thing about it is, for the SMFMMTs, they know what they're doing. Individual names that have already reported earnings have already had their volatility gap and their price movements to even over more bought levels. Is that there's so many overbought stocks out here. They were all good buying at the bottom, but you got to remember that the S&P 500 off of the 2009 low on a percent level has moved to such levels, and this is also part of an exuberant phase, which is okay. There's been lots of good things that have happened to drive them higher as well. However, there are a lot of headwinds around the corner as well. There are seasonality patterns that markets do at certain times throughout a full trading year that the public isn't quite aware of, and they probably should be. So for the public model and you kind of people, you just go to stockmarket.Understanding, make an inquiry about something that you need to learn, and we'll help you. We have over 300 different types of services that we offer. No problem. The one that we do offer you right now for free is to let you know that this S&P 500 has had a very nice bull run. We've had a monthly buy signal. It's just that we're overbought. We are going to have a correction. How deep it's going to be is yet to be determined, because there's going to be a lot of international political events. There's going to be key worldwide events. There's going to be earnings events. Forward looking is the next earnings. We're just winding down this season. Go to our homepage and look at them all. Overbought, S&P correction around the corner. Once again, when we called the last monthly correction, we did. Here's a good snapshot of the weekly. And remember, we're market makers, and you know, the public day trading model and whatnot doesn't work like we do. We have a different thing that works well. So I just want people to know here that this neckline is right below here. Our S&P target was 1375. We got up toward that area yesterday and we had a correction. We got to 1370 right here. That was the high. We said 1375 on the upside. We got lots of videos there in our MMT application that tells you. And we could see where we were going to go, and the earnings season is coming off. So what drove them higher to exuberant overbought levels, there's going to have to be correction. At that time, when we have the correction in the leadership names across the indices, across the sectors, that will create buying opportunities. It will create all kinds of wonderful things that you can do. You just need to remember one thing, though. When they do correct, here's a correction that we called for right here. And we had the 4-week slide that bid to the 20-week moving average. And we bounced, and it was over. It wasn't going to correct any more than that. The second correction, now that the earnings and the hyper volatility headlines are getting out of the way, it's going to be harder to drive S&P individual stocks much higher than what they already are, because most of the money in the current cycle is all in. Welcome to the S&P 500 forward looking correction.